Joining us on the line now is SocGen's head of metals research, Robin Bhar. Robin, welcome back to the show.
Thanks very much.
So as we're winding down 2016, gold is under pressure right now, Robin. Do you think that gold can find a bottom here?
Yes, we do, for a number of reasons. There's still a lot of uncertainty going forward. I think there's very sound reasons why gold has struggled, but we think it can find the bottom because we believe will still be economic and political uncertainty moving forward.
And let's focus on this outlook that many have for positive global outlook on the economy. Would you say that's perhaps the biggest headwind that gold's going up against right now?
Yes, I think it is. When you look at the investors in the gold market, they've moved to liquidate either derivative positions or more commonly their ETF holdings. And they've done that because they can see a lot of optimism going forward. And if that's correct, then one would suggest that equity markets are going to continue to remain well underpinned by growth going forward. So U.S. stock markets likely to remain very attractive, and that's diverting, I think, a lot of investment flows out of precious metals and notably gold.
Robin, do you still think people view gold as a safe haven? We haven't seen many people flocking to the metal given the recent events we've seen in the news. So could there be something else at play? Do you think the U.S. dollar could be stealing gold's thunder? Is that where people are flocking to and turning to now?
I think that must be the answer because given the terrorist outrages that we've had in Berlin and then the assassination of the Russian ambassador in Istanbul, gold hardly budged. So it wasn't really seeking any safe haven bids. Instead, the dollar was receiving the safe haven bids. So very disappointing performance for gold as investors, or maybe even go into the government bond market. So U.S. Treasuries and the U.S. Treasury market may well have been the beneficiary of any safe haven flows.
Robin, that said, what forecast are you eyeing for gold as we're about to start 2017 here?
Well, we have an average for next year of $1,300 an ounce, but we're looking perhaps to revise that lower given gold's very disappointing performance since the U.S. election. But we still retain an overall positive bias. We think gold can find a bottom. There's any number of political uncertainties with general elections in France and Germany in 2017. But I think the biggest uncertainty is whether President-elect Trump can really deliver on many of his campaign pledges, and that's really to boost the U.S. economy. Having said that, though, I think 1,300 as an average is looking quite ambitious, and therefore I think there is scope, obviously, to revise that down.
All right, Robin, before I let you go, some thoughts on silver. Any forecasts here?
We believe silver, although tracking gold lower, should perhaps be more resilient as both look to drift lower over the course of 2017, certainly the first half.
Robin, thank you so much for joining us. Happy holidays.
Same to you. Thank you then.
And thank you for watching our continued Outlook coverage. We'll have more experts coming your way on Kitco.com. Be sure to stay tuned. Thanks for watching.